This week in Billionaires, cooling demand for Labubu dolls has wiped $6 billion from the fortune of Wang Ning, the 38-year-old billionaire chairman and CEO of PopMart International Group, the Chinese company that makes the plush collectibles. The latest edition of Labubus seems to be losing traction in mainland China, sending the firm's shares falling by more than 20% since late August and pushing Ning's fortune down to $21.6 billion. Oracle's Larry Ellison saw his net worth grow by nearly $100 billion on September 10th, the largest ever single-day gain on the Forbes real-time billionaires list. The company's shares surged after it projected that revenue from cloud infrastructure to power artificial intelligence would jump to $144 billion over the next 4 years. Oracle's skyrocketing stock price meant Ellison was briefly worth more than $400 billion, only the second ever person to break that barrier after Elon Musk. Elon Musk, the world's richest person, spent about $1 billion buying more stock in his electric car maker Tesla on September 12th, sending the firm's shares up by 7%. The move came just a week after Tesla proposed a new compensation package for the billionaire CEO that could be worth close to $1 trillion if the automaker achieves several goals over the next decade. Welcome to Beyond the Billions. I'm Giacomo Tognini, a staff writer on the wealth team at Forbes, and joining me today is Justin Birnbaum, a staff writer at Forbes covering the intersection of sports, business, and wealth. Justin, great to have you here. And, my first question that I've always had working with you is, how often do you get to go to games for, research purposes?
That's funny. Listen, I grew up a sports fan, lifelong sports fan, still spare time watch sports. It's kind of awesome that I get to do this for a living. Not as much as you think, because I tend to do longer term pieces, but anytime I do get to go to something and report, it's a good time. I know it can be kind of a grind a little if you're there every day. When I started my career, I covered the NHL, I covered the Rangers and the Devils. So, I was at the rink for practice every day, at the games every night, and that can be a little bit of a grind, but when I go, it's great job, a lot of fun to do. So yeah,
Your whole experience before was sort of the intersection of these worlds.
Yeah, I've been on the sports money team for almost 5 years now. We cover a lot of different stuff. We have our team valuations list, our athlete earnings list. We're pretty agnostic when it comes to what we cover, so it's kind of like flavor of the week. But I've had the opportunity to touch a lot of different topics and report a lot of cool stories. So it's been cool.
Yeah, so let's dig into that. I mean, last week I believe you published this look at the richest sports owners in America, which is something you worked on for many years before as well. So can you break it down a little bit? Who's on top, and sort of what does that tell us about sports ownership in the U.S. right now?
Yeah, before I got to shout out, I co-bylined that with our colleague Sophia Churchio, so I got to shout her out for that one, for the help there. Appreciated that. So yeah, this is a derivative of Forbes 400. I mean, obviously every year we put out the list of the 400 wealthiest Americans, and within that we track who the richest sports owners are. It goes without saying that Steve Ballmer remains the richest sports owner in America. Right. If I remember correctly, he's 7th overall in the Forbes 400.
Yeah, from his past at Microsoft. Right?
Yeah. I mean, he's worth $153 billion, I think it was, and he's topped the list for a long time. But he's by and far. He obviously owns the Los Angeles Clippers in the NBA, and he's by and far the richest owner. I think what's interesting is that the cutoff for this list has gone up quite a bit. It's $10.1 billion. This year, $9.3 billion last year. 3 years ago, it was $6.6 billion.
For the richest sports owners, specifically.
For the richest American sports owners.
And how many people are on it now?
We ranked 20. I mean, there are more within the Forbes 400, but we ranked the top 20.
Yeah.
I mean, historically, if you're counting control owners, it maybe goes 40 or 50 deep. Mm-hmm. A couple years ago, we ranked every single one, but we now just kind of focus on the 20 because that's, seems to be kind of the meat of what people tend to kind of look at and care about. Mm-hmm. But it varies, so.
And, with Ballmer and the Clippers, what is, obviously most of his wealth is from Microsoft.
Yeah,
other stuff
that's
from
correct.
Before, right? How important are the Clippers specifically to his net worth?
I mean, if you're talking in terms of sheer size, I mean, the Clippers are kind of like the change he's finding in his couch cushions, right?
Yeah. I
mean, he's worth $153 billion. The Clippers are worth $5.5 billion per our last valuations. So, I mean, he could technically buy the team 25 times over.
Jesus, yeah.
I mean, when he bought the team, he bought it for $2 billion, I think the number was. like people are like, that's outrageous. You're crazy. And obviously the valuations have caught up, and now it looks like, not even an overspend at the time. But
the Lakers was like 10 billion.
Well, yeah. So the Lakers valuation, Mark Walters buying the Lakers at a valuation of 10 billion.
Crazy.
That's just a crazy number. I mean, that's what it comes down to, though. At the end of the day, like we value these teams based on like pretty concrete metrics, and if someone decides they really want something and they're rich enough to do it, they can kind of just blow out of the water. I mean, we've seen record sports team sales in the past few years. It's kind of like the numbers just keep going up and up and up, and the market resets every time. But yeah, Ballmer's pretty rich. CEO of Microsoft, has a lot of Microsoft stock, and Microsoft had a good year. So
yeah, and the valuation includes sort of the arena value as well, right?
Our valuations do not include hard asset value.
Yeah.
So basically, we try to value these teams in a vacuum, which is a little bit of a tricky science sometimes. And we try to target what they would sell for in a control transaction, meaning like control of the team changes. A lot of teams have arenas, real estate, other assets maybe layered into that. We kind of put that to the side. We try to do our best to draw an apples to apples comparison. Mm-hmm. And, like if the Clippers are worth $5.5 billion, but they have a $2 billion arena, that's not necessarily fair to another team that's, let's say, equally as valuable and doesn't have that arena. But what we do is, control of a venue, or, when you build, certain things in, like a mixed-use area around, there are certain revenue streams that we factor in that you can only have by controlling an asset.
If they own those,
if you own the asset, if it's closely tied to it. So, like, there's definitely a difference between leasing a venue versus owning a venue, and that'll come back and play well for a team's valuation.
Right. And what's interesting with the Clippers that you mentioned is now worth 5.5, right? I think it was around 2 when he bought it. That sort of the appreciation in these sports teams as an asset. How have you seen that sort of in the years you've been here, like that kind of crazy growth in values?
So it's funny. We've actually taken a historical look at this recently. So Forbes has been valuing sports teams in the major leagues for about, I think it's 28 years, and don't quote me on this, but I believe the average appreciation across all 4 leagues is about 1,800%. When we first did this in the late 90s, teams were worth a couple $100 million.
Right.
The NFL, that's what it looked like. Now, the Cowboys are a $13 billion team.
Wow.
And the values have really, really gone up. Big reason behind that is obviously like the size of media rights has really gone up. Both the NBA and the NFL have massive, massive media rights deals that give them these predictable revenue streams over long periods of time that allow them to underwrite such growth. So, I mean, the short answer is they're going up a lot, and there's really few people who can afford them these days. So you see a lot more ownership groups. You see it broken up in different pieces, a lot of minority sales.
The private equity entering.
Yeah, private equity's coming too. I mean, that's a whole other, side of this as well. But, I mean, these values keep going up as long as they can keep growing revenues. You expect it. I mean, the question of is there a bubble always comes up. But, I mean, when I talk to people, they always say to me, like, we said that 5 years ago and they've still gone up. So hard to predict what the future holds. But I think, like, when you mentioned the Lakers sale, like, that's just another, like, blow the market out of the water type sale. So we're all going to kind of be redefining things after that closes as well.
Yeah, and then I guess the other big ones were Celtics, right?
Yeah, Celtics were $6.1 billion. Yeah. The Commanders in the NFL, I believe, were 6.05. Before that, I think Denver was the high watermark, and that was 4.25 or 4.65. I'm sorry. I'm
it's a lot of numbers.
People they get so big sometimes you just kind of, you mix a decimal here or there, but, so.
And I think we don't have to spend too much time on it, but like you were talking about how you're only looking at sort of majority transactions, right? We also seen a lot of minority ones, right? And often, like I think the Dolphins, right, last year was.
I mean there were other assets.
Yeah. How do you look at those? Where like there's a big number, but it's just a small part of it.
It's a good point. The short answer is like control transactions are always going to carry more weight than minority, but we pay a lot more attention to minority transactions now than we used to. I mean, I shouldn't say that. It's not that when we used to. The size of it plays a role.
Yeah.
Like it depends how much money is changing hands. Like for example, if you're buying 1% of a team versus buying 10% of a team, like the size of the check you're writing is vastly different.
Right.
And then like with smaller teams, like especially in like women's sports, if a team is worth $200 million in the WNBA and you're writing a check for 1%, so $2 million. if you decide you want to write a check for $2.5 million, like that swings their valuation up, $50 million, if you're getting the same percentage. So the minority transactions, a lot of times, like it's hard when they're smaller numbers to say like this is a definitive indication of the valuation because, the money is small, relatively speaking. Like it's a lot of money for us.
Yeah, right. It's all relative.
Yeah, it's all relative. It's small relatively speaking, but that can shift the value a lot. When you start to see like, a bigger stake change hands, if someone's shelling a check for $400, $500 million, $1 billion, like it's hard to say, okay, this is, you can't really say this is not indication of the valuation because that's serious money. I mean, being a minority owner, you don't have a say in what goes on the team. I mean, different ownership groups can leverage partners in different ways. It's kind of like the vice president. The president defines the job for them. So you can have a minority owner that plays a big role or not, but virtually like you are buying something with no control over the actual business in theory, because you just don't have the votes to do that. Right. What's interesting is traditionally, because you're not getting like any real control, you see minority ownership trade at a discount to a control valuation. In a lot of cases, that has flipped. And there's a couple reasons behind it. Some of it is that sports assets are scarce. Everyone wants to be an owner. You take a stake to the open market, and sometimes people can bid against each other for it. So I think that's changing. You kind of just got to peel open the deal, and it's something you got to look at on a case-by-case basis. There are minority transactions we're going to look at and say, okay, this is a good directional indicator. There are other ones that we're going to be like, this probably doesn't impact valuation. So it really depends.
And we mentioned Ballmer and the Clippers. If you're looking at those top 20, are most of those owners in a particular league? Like, is the NFL the highest? Is it NBA? Like, how does it break down in terms of...
You see a high concentration of NBA and NFL. I mean, again, like there's only, if I remember correctly, there's only one MLB owner on there, and that's Steve Cohen with the New York Mets, and he is the richest individual owner in baseball. So, right. I mean, like, it's why there is a rule, I don't want to say against him, but the Cohen tax, there's a luxury tax rule that basically is named after him to try and, like, limit spending. But, yeah, by and large, you see NFL, NBA, I mean, those two kind of lead the way. There's some NHL, there's some European soccer, there's a couple women's sports teams, too. We do for the Billionaires list a version of this that broadens out to the world's richest owners, and you see slightly more diversification, especially kind of a few more European clubs in there. But generally, that's the breakdown. I mean, NFL teams are worth so much. NBA teams are worth a lot too. Yeah. If you're owning a majority stake in that, you're pretty rich. It goes without saying. So,
it's the scarcity you're talking about as well, right? It's not like European soccer is also scarce, but there's a wider universe of teams. While in the NFL, that's what you have.
I mean, there's a massive prestige in being an NBA or NFL owner.
Right.
I mean, it is a very, very limited club. I mean, the same goes like if you were to own a team in the Premier League or one of the major 5 European soccer leagues, or even there are some trophy like assets around. Like, I mean, Ajax is a publicly traded team, but that is like the crown jewel of the Dutch soccer league. So,
but not comparable, right? Obviously, at all.
No. I mean, it depends. It's like kind of like a cultural thing if you think about it. Like here, the NFL is king. And the NBA also has an extremely strong presence in our country, and basketball is a growing sport too. But there's huge prestige in owning a team in any of the major North American sports leagues, and I think that's going to continue to be the case. There's only like 150 of them, or sorry, I forget the exact number. But people are always going to be vying for this, and that is a factor that can continue to push valuations up.
And I'm guessing not at the same rate, but NHL and MLB teams have also seen an appreciation over the last few years, right, compared to,
at the top, I mentioned kind of the average between all these leagues is something like 1,800%. I mean, MLB and NHL are folded in there. I don't remember the league-specific appreciation rate, but I mean, you're talking about there are billion-dollar franchises across all these sports, and you're just it's hard to get in for less than that. I mean, again, it's why we're seeing owners rarely own. I shouldn't say rarely. Owners don't always own 100% of a team anymore. And they bring in partners and this and that.
It's hard to find that much money. Like even obviously Mark Walter and Lakers. Yeah.
I mean, there was a lot of reporting about the Celtics sale when they were putting together that group.
Yeah.
That's a big number. That's a pretty big number. So yeah.
And even like the growth of other leagues. Just briefly, I know for around when we published the World Billionaires list, had that fantastic story on Michelle Kang and
Thanks,
how
man.
she's like the first. Yeah, of course. And I encourage everyone to read it too. The first like women's sports billionaire, right? And like how she, used her fortune to then invest in these women's sports teams. So you're seeing a lot of growth there as well, right? Obviously lower numbers, but
it's one of the reasons we released our first WNBA and
Right.
NWSL valuations list this year. Those were done by our assistant managing editor, Brett Knight. Did a great job with those. I had the chance to chip in on them. Obviously, I was reporting that Michelle Kang story too. But these teams are worth real money now. I mean, they are not at a point where, the men's team's valuations are still kind of significantly higher. But, many people I've spoken to have said, like, the $1 billion women's sports team is coming, and it's coming a lot sooner than you think. And a lot of that has to do with how they are able to kind of grow revenues in the next few years. I know the NWSL has a relatively short media rights deal, and they'll be able to renegotiate. I think they can renegotiate it for 2028. The last year was 2027, I think it was. So it's possible that they can get a pretty big step up from there if everything goes to plan. And, if you make more money from broadcast rights, that leads to higher valuations. Also, teams are selling for more and more and more. I know last year, Angel City FC, or I'm sorry, that might have been earlier this summer. Like the dates, I'm losing the dates. But Angel City FC, sold to Bob Iger and his wife Willow Bay. Bob Iger is CEO of Disney, obviously. And that was a record price too. So these valuations are going up. They're significant money now, hundreds of millions of dollars. Michelle Kang is someone who has been adamant about growing the sport, investing in it. And what was really interesting about her is she's not doing this because, as she said in her own words, that this is a charity, this is some corporate DEI project. This is what she said to me. She said, I'm going to make a lot of money off of this. I'm a business person. I'm going to make money off of this. There's a huge amount of growth here. And that's what, good people in business do. They chase exponential growth. So, it's a really exciting space. There's a lot of growth. I'm a big WNBA fan. I like watching the New York Liberty. I've been to a bunch of games, and their experience in Barclays Center has been fantastic. So I'm excited to see where these leagues go. There's a lot of growth. There's a lot of work to be done, especially on the parity side as well. We'll see.
Yeah. And you're constantly in touch, I imagine, with like bankers, investors, owners and the like. What are some sort of like important trends you see changing maybe that we haven't touched on? Because I was going to ask you about private equity and how the rules have changed.
I'll get to that for
a
second, but the line I like to put out always is someone said to me, and they used an expletive, so I'm going to tone it down a little bit, is that you couldn't screw up an NFL P&L if you tried, just because the NFL has such great like recurring revenue. I mean, in a lot of cases, the centralized national revenue that teams receive is more than what they're spending in general anyways. So that's funny. Private equity, though, really, really kind of interesting change. And I think we're kind of in the early innings of how that's going to play out and what we see. Private equity tends to operate on shorter timelines, obviously come in, lower expenses, in some cases take on debt, sell out. That's kind of, the business model that's worked for them in the past. In these sports teams, they're investing in these leagues where there's a lot of rules around what they're doing. They're effectively, they have no operational control. Like I said before, like a team can define how they want to use a partner, but it's kind of up to kind of the arrangement they make. And in some cases, these leagues are setting timeline rules. So they kind of have to operate a little differently. The difference is sports teams in value have just gone up so much that it's hard for institutional money to not want to be involved. But
and even over the life cycle of like a private equity fund, odds are they are still going to see a big value increase in that time.
There are rules about how they can sell and when they can sell, and kind of obviously these funds have their own life cycles. But the way these things have been growing and the way they can underwrite revenue growth over the years has really kind of made them kind of foaming at the mouth to get involved with that. I think what's interesting is, as we talked about before, these teams are super expensive now. They have costs that need to be funded, especially for the teams that aren't turning a profit. There are projects they want to engage in that effectively can improve the valuation, whether it's an arena project, kind of a redevelopment project around the area. You need capital. You need capital to do these things. And if you're, let's say, a family that has owned an NFL team and that is your primary source of wealth, you may not have, $500 million sitting to the side that you can just invest.
Your wealth is the team, right?
Your wealth is the team.
Yeah.
So you need to access that wealth in order to kind of take these improvements, or even in some cases people just want to be more liquid. Like they've sat on these investments for a long period of time and they want to be able to access it and take home some of that wealth. So private equity is interesting because it offers solutions to both of that. You can get capital for a project you want to, whether it's stadium development, renovation, new stadium, area redevelopment, or if you're a minority owner, a majority owner, you just you want to take some money off the table. You can get it from a private equity firm. I think what's really interesting and what we've started to look into is generally these private equity transactions are about taking equity in the team, but as kind of capital needs get more unique and bespoke and all these words they throw out to kind of describe how complicated it is. Private lending and private capital is going to be something that'll be really interesting, because you're going to see that these institutional offerings can lend to teams with less restrictions than necessarily kind of the big banks. And again, we're in a world where you're going to need capital. You're going to need money to fund these types of projects, because a stadium gets outdated now after 5-10
and
years.
Those are also huge expenses, right? Like I don't know how much Ballmer spent on the Clippers arena, but that's sort of like
massive,
billions of dollars.
Massive expensive, and then the upkeep of these things, and also just as player salaries go up, which we're seeing. I mean, the way the NBA salaries are trending, in a couple of years, like we're not that far off from someone earning $100 million a year on the court alone. Like that's probably only several years away at this point. So you need to find ways to bring money into the equation, and institutional money is going to be a huge solution for a lot of people in that sense.
And jumping off the point you were talking about with families or owners where the team is their wealth, you had this great story last week also on the Colts owner, so the late Jim Irsay's daughters. Tell us a bit more about that, sort of how it was reporting that story, and sort of how they fit into this conversation we're having about sports owners in the U.S. right now.
Yeah. No, first off, thanks for the kind words. Appreciate it. Obviously Jim Irsay passed away. Really sad thing. I know some people who have worked for the Colts traditionally, and he's a complicated man, but obviously they speak very highly of him and the impact he had on the team, the community. So it was a pretty sad thing to see, but. His daughters inherited the team. He had 3 daughters, Carly Irsay Gordon, Casey Foyt, and Kaylin Jackson. And the 3 of them are now kind of stepping in and taking the reins. Carly is going to be kind of like the lead person, but all 3 are pretty closely involved from what I understand. It's become a little rarer in sports to be solely 100% owned by someone. We talked about it a little before, especially by a single family. In the NFL, it's a little more common because these have been multi-generational assets for a long time. Obviously, the Colts were bought by Irsay's dad, Robert Irsay, in kind of a strange, unprecedented move, because basically the owner of the Colts wanted out of the Colts and wanted a different team. So Irsay bought the Rams and they traded franchises.
I had no idea. Like that was really fast. And then like the move, right?
Well, and then later on, Robert Irsay, he kind of, the Colts weren't very good under him. And also he spent like a decade battling for public money to build a new venue. And there's the famous midnight move where the government was basically talking about seizing the team back through eminent domain, and he moved the team to Indianapolis in the middle of the night, which was famously dubbed the Midnight Move. I'm pretty sure there's a great ESPN 30 for 30 documentary about it. For those out there who haven't seen it, they should check it out. But that's kind of an interesting bit of sports history. But the one thing I really kind of learned in my reporting is that Jim Irsay died relatively young. I mean, if I remember correctly, he was 65. I mean, that is relatively young, especially today. He was preparing for his daughters to take over for a long time. They all have been around the team since they were young kids. They've all held positions in the organization for a long time. In some cases, they've gone and done their own thing for a little while. Like Casey Foyt, the middle one, she went and worked for the NFL a little bit. A little on kind of the planning for the inaugural London game, which is now a yearly thing that they do. But, they are now at the helm. The Colts are 2-0 this year, so
it's early, but
off to a good start. But it's interesting to see how it goes. I mean, again, they're extremely qualified to run this franchise. They've spoken openly about the impact of their dad and how he's included them in conversations and kind of stuff about the team from early on. So be interesting to see how it plays out. But, again, condolences for their loss, and hopefully things go well.
And they're not sort of the only ones where the team is sort of that's their wealth, that's what they run. I mean, Jerry Jones has other assets, right? But the Cowboys is the largest.
I mean, yeah, with Jerry Jones, that's another one that is, now it's Jerry Jones and his family.
Yeah, right.
I don't know specifically how it's structured, but Jerry owned 100% of the team, and it's set up in whatever way where his kids participate or whatever. But I don't have specifics in that. I did spend some time with Jerry Jones a few years ago, which was really interesting. But I mean, he has significant wealth elsewhere now, but the Cowboys are the core of it. Like Jerry's invested in Comstock Resources, which is an energy company. He made his initial money in oil and gas, which allowed him to first buy the Cowboys, although he leveraged himself quite a bit to do that. And he says the early stress of that and also kind of running the Cowboys help made him develop health issues. That was like a really interesting thing. He just had 8-part Netflix documentary come out about his journey with the Cowboys. Another good watch if you're looking for things to watch. But yeah, I mean, family ownership's interesting. In a lot of cases, like the one thing you hope is that your heirs aren't fighting over it. I know the Chargers have had kind of an estate battle. Before the Waltons bought the Denver Broncos, there was a pretty notable estate battle there from the heirs of Pat
bringing
Bowlen.
in the family early, I guess, like the Ursays did, right? And
yeah, I mean,
the succession.
It's hard to say someone's family dynamic without spending time with them or knowing them too well. But I do think it seems like they had a pretty united front. I mean, when they announced the ownership transition in a press conference earlier this year, they all did it together, and they all spoke kind of in ways complimentary of each other and about how they look forward to working with each other and how close they were and how their father included all of them. I can't speak to the other ones. I to a certain extent, I can't speak to what happened behind closed doors with the Colts too.
Yeah.
But yeah, I mean, it's helpful to have a clear control person in Carly Ursay Gordon, but the fact that she has publicly said she wants this to be collaborative between her and her sisters, I'm sure is helpful. So, yeah.
And they're all individual billionaires now too, right?
Yeah. I mean, the Colts are worth so much that, it certainly, makes their own personal fortunes pretty big. So, yeah.
And then I guess we're talking about families. Looking at the individual level, you also recently covered Roger Federer, tennis legend, becoming a billionaire the first billionaire as a tennis player, right?
So technically, no. So, and I hope I'm not pronouncing his name wrong, but Ion Tiriac, the Romanian businessman.
Oh, you're right. Yeah.
So he actually won the French Open in doubles, and then he had a pretty wild career doing a lot of different things. But he, God, if I remember correctly, he hit the billionaires list in 2008.
Yeah, it was definitely much after his tennis career.
It was way after his tennis career, so it wasn't closely attached to that. But Roger Federer is the first contemporary tennis player to get on there. I mean, again, only Tiger and LeBron have done it while active, and I guess technically speaking, Federer, who knows what kind of shape he's in, but he might have been able to keep playing. I think he's playing in an exhibition soon, so that won't bring him back to active status for us. But I mean, Federer is a remarkable case. I mean, he's a testament to kind of how athletes view themselves as brands and businesses and organize themselves in ways that set them up for the future. I mean, he had the benefit of coming through an era where athletes are making more money, than ever. The athletes today, it's possible they surpass him one day in terms of what they're able to earn. I mean, he was a pretty big unicorn in his ability to earn. And there's a lot of things that contribute to that.
The endorsements.
Like his clean cut image,
right.
Being Swiss. He worked with a lot of Swiss companies coming up, and he retained a lot of those relationships. And I mentioned that he's Swiss. He found probably his biggest win in his own backyard in On Running, On Holdings. The shoe and apparel company that is now publicly traded, and he got in very early and very well, and at a very good number. And we report he's got a stake in that. I mean, it's pretty widely out there that he has a sizable stake in that, and that contributes to a huge chunk of his fortune. So, I mean, with the amount of money he earned and continues to earn, I'm sure he probably would have gotten there one day anyways. On just made it happen a lot faster.
So we've been talking about individual billionaires in sports, families, the richest owners like Ballmer. What's sort of one really surprising thing that you've learned or looked at this year in your reporting?
I mean, I don't know. It's surprising. Again, I'm always, I don't want to say I'm shocked, but sometimes you get a little bit surprised at how big the valuations get in these like new transactions. Like Mark Walters buying the Lakers at a valuation of $10 billion. Like that, the record before that, which just happened, was the Celtics at 6.1. So that really just absolutely, like, again, if you told me the Lakers were for sale and they were going to sell, I would have given you a big number, but I don't know if I would have gone that high. So these sales just continue to, open our eyes and reset the market and go up and up and up. And, you wonder at some point, is there a correction due? But it seems like the scarcity value is just driving this so much. I mean, in a lot of cases, like the NBA is a massive media rights package and a great business. NFL too, and a lot of these leagues have a lot of great things going for them. But you wonder, like, are we due for a correction? I guess not. If Mark Walter is willing to pay, like $4 billion more than the record. So yeah, I mean, sometimes you get a little taken aback by how big these numbers are getting, but scarcity, man. Everybody, all these ultra high net worth individuals want to be sports owners, it seems like. And when you have like a trophy asset, like, obviously the Lakers stand above some of the other basketball teams, or even like, the Dallas Cowboys are America's team. The values are going to be really high.
Yeah. And we have so many more of these ultra wealthy people, right? So,
I know. I think, I mean, you'd be able to tell better than me, but I think the billionaires list is up to close to like 4,000 billionaires identified around the world or something like that. Yeah. So, I mean, there's a lot. I mean, there are a lot. I mean, I don't know, like some of those people are just getting on the list at $1 billion, and I don't think they'll want to put their whole net worth up into a team, but the list is getting pretty big. I think the crowd of people who are truly like the cream of that crop is still pretty finite. But there are a lot of ultra net worth high individuals out there.
Yeah. Well, it's been fascinating chatting with you about this today, and encourage everyone to go read the stories we talked about and learn more about the amazing work that the Sports Money team and Justin does. But thanks so much for joining me.
Yeah, Giacomo, thanks so much for having me. Appreciate it.